Welcome to this week's episode of Your Stock Request for the 30th of November. Every week I will look at the charts for a few different stocks as requested by you. You can email us at mail@fairmontequities.com. There's a limit of one per person and no guarantee that your stock will get covered depending on the demand. Also, just take note of our disclaimer, any advice is general only. The first stock we have is Group SCG. This is a weekly chart. I'll just zoom out for the last, say 5 years. You can see that, like most property trusts, it's done very well up to its peak in 2016. What's clear though is this downtrend from 2016 now seems to have broken. It's made you can see a high, maybe a couple of high lows. So that's a positive sign for this stock. Moving to a daily chart, we can see a nice sort of impulsive move up here off the October low, sideways in a pennant, another impulsive move up, and just easing back again. So looking good as a company to hold. In terms of a target, I'll just get the Fibonacci tool here. If it manages to recover about a third of this pullback, so heading up towards a 38.2% retracement level, then yeah, we could see a few peaks and troughs over the year as well. So 440 might be an initial target, but we may well see it extend up towards 480. So this is Fortescue. I'm going to zoom out, say for the last 10 years. This was the peak here in 2011. Zoom in a bit. So after the GFC, Fortescue went back to about $7 and then fell away to about $1.50. And as we all know, early last year it rallied from $1.50 towards $7, breaking this downtrend. And what it's doing now is just coming back to sit on top of this downtrend line. So the longer term view still looks positive, even if the share price is struggling at the moment. Coming into a daily chart, it should find support pretty soon. For me, I couldn't be buying it here. I mean, I'd be happy to hold it, but to buy any more of it here, I'd rather just see more evidence that it is finding support. It's coming back to retest the low in June. So preferably, what I'd like to see is is for the stock to pop up and maybe even push through $5. So I'm happy to give up the first, say, 10% of the move to be comfortable that the stock is heading higher again. The next stock is Petrol Energy. Heard of this one before? Sorry, we'll just zoom out a bit. So earlier this year had a peak near 4.5 cents. It's pulled all the way back. What's encouraging is this nice move up here in the middle of October. So it gapped up from basically it looks like around sort of 12, so about 1.2, 1.3 and rallied to about 3. So pretty much it doubled in one day. And here is the volume. So this bar here shows us that it was done on good volume. So that's a positive. Since then, it has eased back, but in the space of about a month, it has not been able to overcome 1 day's price action. So that's bullish. Volume's been low on the way down, which is good. Whether it comes back to 1.5 cents or whatever, it's hard to say. So it's hard to pick a good entry point here. One thing you can do is maybe just wait for it to, start launching higher again on volume, and then you could probably follow it. All right, the next one is Blackmores. So just looking at the last few years, as most people will know, it's gone from about $20 to $220 in the space of about a year, and then in the space of almost 2 years, it's fallen to under $100. So just the timing of the move shows that longer term it's still not too bad. In that we've seen about a $200 rally in a year, and then in almost 2 years the market hasn't been able to push it all the way back down to that $20 mark. So overall that's a good sign. Clearly that downtrend has now been broken. I'll just get rid of that line. So where the stock pushed through $100, we put a chart out saying look, it could probably run to the high 130s, which even then seemed a bit crazy. But so what I did at the time was I just pulled up Fibonacci tool and thought, well, it'll probably, if it's breaking the downtrend, it should rally at least to this sort of 38.2% retracement. There were a couple of lows around that point. But as you can see, it just blasted through that. Gone all the way up to the 61.8 instead. But as you'll notice, there's been a bit of price rejection. I'll just zoom in a bit more. Been a bit of price rejection in the last few weeks at precisely that level. So it'll probably come back into the range here. So I wouldn't be chasing it. If I still held it, I'd be selling it, to be honest. I think this move up here is fairly unsustainable. So it needs to come back and use up some time. I'd probably put my money to use elsewhere, and then if it found some support, we can always look at it again. Bannerman Resources, BMN, nice impulsive move up earlier in the year on volume. So that's the volume down there, and then the volume dried up as the shares fell away. So that's good to see the volume dry up. It's a shame it came back so deeply though. But in the last, sort of 5 weeks, it's looked fairly bullish again. So this is a nice sequence of candles here on the weekly chart coming into a daily. You can see the nice rally up, bit of price rejection here at 5 cents. So I'm pretty sure this one's going to keep heading higher. And if you're holding it, happy to hold. Okay, the next one we have is Stockland. We're on the weekly chart here. I'll just zoom out a bit more. So, like the other property trusts, had a good run and peaked in 2016. Zoom back in. So there's going to be a bit of resistance there. We've seen some support coming around here. So the shares are in the middle to the upper end of this trading range. So I couldn't really be buying it. If I was holding it, I'd just see if it can head a bit higher. Might find a bit of resistance there. Look, if you were to buy it, I'd prefer to see it break through, maybe even push through 5, and then having congested for so long, if it was to push through 5, we could see a fairly decent rally, but we don't know if that's going to occur. It might just reverse here and fall all the way back again. So at the moment, it's in wait and see mode. The next one we have is Mainfreight. I get asked about this a lot because it's fallen quite a lot from over $2 to closer to 60 cents. There's just nothing on the chart that tells me it's going to bounce. If you're holding a small amount, look, I'd be tempted to keep it because it's it might already be well oversold. So at some stage, the buying will come in and could launch it higher. But we just don't know when that's going to occur. We need to, I guess, similar to the Fortescue comment, I'd rather just see that upwards momentum start happening first before I'd even, think about buying some. So at the moment, yeah, look, the chart's still pretty ugly. There's not much else to say. Okay, finally, primary healthcare. Look, it's an okay looking chart. Again, not one I'd be buying. So what I've seen is a nice move up in early 2016, but then it struggled, made a peak in early 2017. But then we've seen some impulsive moves down, struggled to rally, another move down. So we're seeing a couple of lower highs, a lower low. I guess some people might be drawing a trend line here and saying, well, it's just breaking out now. I'll just zoom in. So maybe it's breaking out, but we need. I'd prefer to see it hold these levels a bit longer. Otherwise, we're still it might just come up here and then reverse. So we're still looking at a lower high, and it might go on to make a lower low. So can't get too excited about primary healthcare. All right, well, that's it for today. Remember to send in your requests and just make sure you do the right thing by your friends. Forward this on, tweet it, do all those things. The more people that send me a stock to look at, the more chance we have to uncover something that's pretty interesting, and I can share that with everybody.